Okay. Hey everyone, this is Kanisha that you see here on your screen with me live in real time. I'm going to be admitting more people into this conversation as we go along, but if you guys have any questions, definitely when you get an opportunity to ask those questions, do that. She is a professional. In fact, let's go ahead and start off with giving everyone a bit about your background.
For sure, for sure. So I'm Kanisha Coleman, and I own a boutique tax firm. It's called Coleman Tax, and we exclusively serve beauty entrepreneurs. My whole goal and my mission is to put you in a position where you're paying the least amount of taxes legally possible. So I serve, when I say beauty entrepreneurs, it's a very broad spectrum. So I have my client base consists of hairstylists, nail technicians, brow artists, lashes, and those on the retail side. So those who sell hair bundles, they sell lashes, they sell like the press-on nails, cosmetics. I can go on and on, but really anybody that falls into the beauty industry, whether service or product.
And can you tell us about your background, how you got to the point where you founded your own tax firm?
Yeah, for sure. So when I got right out of grad school, I went right into the IRS, and I spent most of my career at the IRS for about 8 to 9 years there, and I loved it. I really fell in love with accounting and tax through my experience as a revenue agent. But couple of things I really got just overwhelmed with, right? So one, it was very confrontational, as you could imagine, right? So I was calling people or showing up to people's doors saying, hey, I'm here to audit you. And then at the end of the day, I was making lots of adjustments, increasing their tax, collecting the tax. And it just, at first, I won't lie, it was fun, but then it's really confrontational. Things get really heated where you kind of fear for your safety at the end of the day, because people don't pay about their money. And then I think secondly, I found myself wanting to be more on the helping side, right? So I audited my fair share of small businesses, and they were not outsourcing their accounting and tax work. They were kind of just trying to do all the things. They were doing it themselves, and they kind of really wasn't knowledgeable in that area, and they were making some very just simple mistakes. And as an agent, I couldn't tell them what was right. That was kind of a conflict of interest. So I had to make the adjustment, but I wanted to, when I left the IRS, I really left so I could help the small business owner, be able to cross their T's, dot their I's, and keep more of their money. I mean, why give it to the government? I mean, personal opinion, they ain't doing that way anyway. But but yeah, I wanted to really help. I chose beauty entrepreneurs because if I was going to go off on my own, I wanted to do something that I was like organically interested in, right? So what was I spending all my time and money on outside of work? It was on hair, it was on nails, it was on makeup and skin and all of this. So I said, you know what? I organically like vibe with that, that audience. So that's who I want to serve exclusively. That's who I want to help.
Awesome. So I wanted her to touch on her background just so all of you could appreciate the fact that when we're talking about taxes and you consider worst case scenario, that worst case scenario is typically an audit. That is what Kanisha was doing on behalf of the government, meaning she knows the ins and outs of tax law. Like she mentioned, the little mistakes that should be avoided, she knows those like the back of her hand. And that's why I wanted to bring her in here. I know that she is totally focused on beauty entrepreneurs, and we have a ton of those in this group, but also know that her background spans all industries. So regardless of whatever space you are building your business in, Kanisha, this is our tribe, a small sample of our tribe of small business owners and mostly new entrepreneurs. But whatever space, make sure that if you have questions, you speak up, because it was literally her job for nearly a decade to master tax law. So That being said, let's go ahead and dive in. I'm going to pose a question for Kanisha. She is going to respond. We're going to have a little banter, and then I'm going to give you guys an opportunity to ask for any clarification or ask your questions on that subject. Then at the end of the interview, it'll be like a Q&A session between you guys and Kanisha. So let's get started with those minor mistakes, those should be kind of obvious mistakes that you see a lot of business owners making.
For sure. So the biggest one, and I'll say I was just going to reflect on my past tax season, like this year, following the 2019 return, right? But this has been across the board since I've been owning my own firm. For whatever reason, small business owners are afraid to deduct their expenses. Like they'll look at an expense and they'll just think like because it's not a high dollar amount or because it's such a high dollar amount, oh, well, I'm not going to deduct this. I don't want to cause any red flags to the IRS to audit me, right? And what I say to that is, when in doubt, deduct that expense. Because this is what I'll say. Like, for example, I had a client I just got done working with, and she was in the space of personal brand management, right? So this was a client that got grandfathered in before I chose the niche beauty entrepreneur. So I kept her because I really enjoy working with her. And what she does is she provides services to small business owners to build their brand. So her consulting services, she would take a Lyft or an Uber to go see her clients. This resulted in thousands of dollars throughout the year. She did not tell me this because she said, oh, it's too much. I don't want to deduct it. No, we're going to deduct that. When in doubt, deduct that. It doesn't matter how small it is if it's $1 or $2, or how high it is in the tens of thousands of dollars, still deduct it, right? So no single deduction, no type of deduction is a red flag to the IRS, right? A red flag to the IRS is maybe that deduction in a certain context, right? In a certain situation and how it fits into a certain narrative. But no single type of deduction will the IRS say, okay, I'm going to audit this person. Certainly not for Uber and Lyft rides. So for business, right? So if this money that you spent is for your business, even if it's somewhat related to your business, even if you're not sure if it's related to your business, deduct it. There is no penalty for making a mistake as to tax deductibility. Worst case scenario, they just reverse it and we move on. But when in doubt, deduct it. When people think, oh, this expense is too high, $2,000, $5,000, $10,000. In the eyes of the IRS, those are not high dollar amounts. They're just simply not. $10,000, maybe 10 million, maybe 100 million. Certainly not 10,000, 5,000. Those are not high dollar amounts at all. So don't be concerned about red flags and being audited. Most audits are random, are completely random. You came up, it's your time. It's like jury duty, completely random, okay? So when in doubt, deduct those expenses. Keep it in. Secondly, back to mistakes, right? What are some common mistakes? Small business owners aren't tracking their business expenses, right? They are commingling funds, meaning they don't have a separate business bank account. So they're spending money out of their personal, and because of that, it's all mixed together and they're not keeping track of what they're spending on business. We got to keep track of it. We cannot deduct what we don't track. So track your expenses, deduct all of it if it's related to business. If you have a question about it, when in doubt, still deduct it.
So let's back up for a second and talk about deductions in general. I know that a lot of people here are first-time entrepreneurs, so this entire concept of having to save up to pay your business taxes and then that amount is what you get to deduct all of these expenses. Like, can you just give us an overview of how all of this stuff works?
Right. So for example, you as a small business owner, you have revenue coming in, right? And then to make that revenue, you have business expenses. So I'll just talk in like the simplest, like accounting terms. Money you make, money in, and expenses that you have money out, right? Most business expenses, money out, are tax deductible. There are very few that are not, and there are very few that have limitations. For example, meals, right? If you go meet a client or at Starbucks, or you have a big client meeting and you guys have food there, instead of deducting all of it, you only can deduct half. Or entertainment, that is no longer deductible at all. So if you're taking them to, well, no one's taking anyone anywhere right now, but if you were to take them to a basketball game or something, those tickets are not deductible. But besides the few exceptions, and there are very few exceptions that you can't deduct, everything, almost all of your business expenses will be tax deductible.
And so why is it a benefit to maximize your deductions and keep track of that? Like, what do you, as a business owner, when you file your taxes, like, let's even step further than that.
Mm-hmm.
Over the course of the year, business owners, like, all of the money you've made isn't technically your money because the government needs its cut. Can you tell us about that?
For sure. So when it comes to taxes, right? Your tax liability, so your tax bill, will be solely based on the money you made minus your business expenses. And I'm going to use business expense and tax deduction interchangeably here, so I can tie it into how it relates to your tax bill. So
okay, but everyone, at the end of the year, you get a bill for the money that you've made. That is really important to note, because a lot of, like, if you're doing it for the first time, you have no idea, then you file your taxes and don't understand why they're asking for money instead of giving you money. Like, there's a bill that needs to be paid, so make sure that you are monitoring all of this stuff and keeping what Kanisha has to say in mind.
Yes, for sure. So every regardless if you had your own business or not, let's assume you were working for someone and you were an employee. Every money that you earn, or even some money you don't earn, and you received it, the government wants their cut. That's every penny you get, you receive. There are few exceptions, very, very few. But most of the time, if you make any money or receive any money from wherever, the government wants their cut. The only way, and this is my segue into the business part of this all, right? So you have your business, you made $100, okay? You spent in a business expense $25. So you have net income of $75. That amount will be what your tax bill is based on. And your tax bill is a percentage of that net profit, right? And that percentage can range. It can range between 10% all the way up to 29, 30%. It can go even higher, right? But in general, your tax bill is a percentage of your net profit. Let's say you made a loss. You made $100, but you spent $125 and you have a loss of $25. No taxes. You don't have a tax bill because you didn't make any money. You actually lost money. And the government, our tax system, tries to be fair. They say, okay, you lost money this year. You lost $25. Next year, when you make money, if you make money, we're going to allow you to take that loss next year too, to lower your tax bill. So that's where business expenses / tax deductions come in. They come in to help you lower the money you made because that's what your tax bill is based on. So we use our tax deductions or our business expenses to make that net profit number as low as possible, because it'll result in the lowest possible tax bill, maybe even a loss, which is a $0 tax bill.
Great. So then let's talk about deductions. I know that we have a question in from Joseph asking, when we have a space that we use for work, how would we properly deduct those amounts for expenses. He goes on to say, if I'm renting a live workspace or own a house that'll be used for work and a specific task like growing plants, juicing, and making seasonings, how would we properly convey that rent or mortgage so we can chart those expenses?
Okay, that's a great question. And I'm glad that that was brought up because there is a myth out there that taking the home office deduction will get you audited. Not a fact. It's not true. Don't believe it. Take the deduction. A lot of people don't take the deduction because of that reason. Take the deduction. So if you, I'll answer this two ways. So first off, if you are renting a space outside of your home, you're going to take the money you spent to rent or lease that space on your tax return. It's on the rent. There's a line that says rent. So you'll put it there, and that's how you could take it as a tax deduction. If you are using space within your home, right? There's also two ways you can do that. And if you're doing your taxes yourself, I will recommend that you figure this both ways, and whatever's higher, that's what you take. And if you're working with a CPA or a tax professional, they'll do this automatically anyway. So the first way you can do it is if you rent or own a home, you would take your rent payments, your mortgage, property taxes, and what you will do is you'll add all those expenses together, and you would take the size of your space that you're working in, divide that by the total space of your home or your apartment. You're going to get a percentage. Apply that percentage to the expenses for your home or apartment, and that's your deduction. But compare that number to the safe harbor. They have a safe harbor method where you take the square footage of the space you work in, multiply that by 5, and that's your deduction. That's a maximum of about $1,500. So do it both ways, right? Do it both ways. Whatever's higher, that's what you can take. And yes, you can take a home office deduction, and if you rent space outside of your home, you can take both of those deductions at the same time on your tax return.
Can you tell us a bit about more of the deductions, things that we may not be aware of that are deductible, like pens and like hair samples, if that is what you're buying for your business? Can you let us know, and packaging and all, like, can you let us know just an overview of what sorts of things we are putting out now, but we will be getting back on?
Yeah. So this is what I'll say, because it's almost impossible to list all deductions, right? I try to answer this question the other way around. Is I say deduct it all. If it is the criteria to deduct something on your tax return is three things. It has to be one, business related. So that's easy. That's easy if it's business related. Two, it has to be ordinary. So if and I'll give an example. I gave an example last year about, I don't know if you remember Angela, if you wore Angela to the club and the penny. I will I'll make this general though. So when I say ordinary, I mean ordinary in the context of whatever you do in your business, in your industry. Okay. For example, I'm a CPA. So the need for me to drive a fancy car, for me to be successful as a tax CPA, no one cares what kind of car their CPA makes. But this is quite different for like a real estate professional who drives their clients around to see homes or commercial property. Typically, and I have serviced realtors before, typically they drive nicer, luxurious cars than the average person because they're using that vehicle as somewhat of an office space when they drive around their clients to see these properties. And so that realtor has a better case of deducting a Maserati than me, tax CPA, right? So long as it's ordinary, reasonable within the context of what you do for a living. The third criteria, so first we have business related, we have ordinary. The third is necessary. And not necessary like we literally think is necessary. When we think of necessary, we think food. You gotta have food or you ain't gonna survive. Necessary in the tax law means that this thing you spent money on was helpful in you maintaining, developing, growing your business, right? So, for example, let me think of something like, so for me as a CPA, something that is necessary for me is some automation, because I can't write tax returns by hand. Well, yeah, I can, but I ain't, right? I don't want my clients to have to fill out anything by hand. That's not the world we live in now. I could, but I ain't, right? So it's necessary. It makes running my business easier, right? And then I'm saving time. So as long as it's business related, ordinary, necessary within what you do, not like within what's typically thought of, but specifically for your industry, because industries are very different from one another. Deduct it. Deduct it. I don't care how small, I don't care how big. Deduct it if it passes those 3 smell tests. Does that make sense?
Yeah, that definitely makes sense to me, but I would love to hear if anyone joining in on this conversation has any questions. I know I have another one in from Joseph, but if anyone wants to take a second to turn on your microphone and ask your question, you don't have to turn on your camera. I understand a lot of people don't want to do that, but if you want to turn on your mic and ask a question, let me give you guys a second to do that.
Mm-hmm, mm-hmm.
Okay, I will go ahead and ask another question in from Joseph. He asks, if someone adds a solar panel to their business, would that investment have additional tax benefits or such an investment for overhead expenses since it's tied to the utilities? And if so, how would that differ for someone who rents as opposed to someone who owns? It's a deep one.
It is, and I may have to have you repeat parts of it. Okay, so for what I know about the eco-friendly, there are tax benefits to eco-friendly things you do to your home. Typically, and I would love to know what type of like business structure Joseph is in, but in general, I've given those credits to folks who've done them on their personal homes, and they've been able to get a credit for that on their personal tax return. Now, if you are an incorporated business and that incorporated business has owns property, so they own this property, can you still get the credit for that? Yes, because you own the building. But let's say you don't own the building, and that solar panel is put on, it will be considered a leasehold improvement because you're paying a lease, but as the tenant, as the leasee, you're doing certain improvements to the space while you're leasing it. So it'll be considered a leasehold improvement, and you'll put that on your depreciation schedule for the current year that you place it in service. Now, they just corrected the tax law. Before they corrected it, leasehold improvements were depreciated over 39 years, much like the structure of a building. But the correction has changed it to improvement property. So now it's eligible for bonus depreciation. You could take the entire acquisition cost in the current year. Now this year is still 100%, but over the next 5 years, that percentage will start to dwindle down. So Joseph, if you're going to do it, now's the time, because it won't be 100. It'll dwindle to like 80, then 70, then 60. It'll start to get smaller and smaller throughout the year 2025. Please tell, I hope I answered his question.
Please let us know if we answered your question, Joseph. And then I see we have Laura that hopped on, and also Gigi. Did you have a question, Laura?
No, I'm actually just turned on my video, just listening.
Okay, it's good to see you, girl. And what about you, Gigi?
Hey, so y'all excuse my hair. I just took my hair out, but okay, so I'm 16, and since this is like legalization for business. I was just trying to see if I actually need to do that because I know a lot of people that are like my age don't really have their business legalized, but the way I want to like transform my business, um, I think it's gonna require some legalization. So like, when should I like start doing that? Like, should I just do it now and get it out the way, and open two business accounts for my business and keep track of my expenses, or should I just wait?
I say do it now. I say, and when we say legalize, right, I'm assuming you mean file an LLC with your Secretary of State. I recommend that for everybody, and this is why. Well, I want to, there's some myths out there that you can't like take deductions if you're not an LLC. False, false, false. You don't have to be legal or incorporated or anything to take tax deductions, okay? So if you're not an LLC or the other type of entities, still take all of your business expenses on your tax return. But to your question, Gigi, the reason why I promote getting the LLC is for protection purposes, not even have anything to do with tax. But if anything were to go down with you and a client concerning a business dispute, we want to protect your personal assets. And did you say that? Did you say you were 16? Okay, given that you're a minor, this is your parents' assets now. So we want to protect you and them by getting the LLC, because the LLC is like a legal shield from your personal assets. The only thing they can go after is what's in your business. And that's why I promote doing the LLC as soon as possible. Also, you needed to get the bank account, the business bank account. So
Yeah.
I would do it for that reason too, because we don't want to commingle funds. It just when it comes to accounting and knowing your numbers and the story that your numbers tell, you want that to be as accurate as possible, and you can't really do that if it's commingled in personal funds. And so yes, I encourage the LLC like right off the bat.
And so can you explain like what can happen if someone either is commingling funds or if they haven't taken that step to protect themselves or their parents as a minor? Like what could happen?
Yeah, so as far as the commingling of funds, right? So I'm just gonna just reflect back on my experience as a revenue agent. If I'm auditing you and I see you're commingling funds, I'm not gonna trust anything on that tax return. Because how do you know what your numbers are if they're mixed in with all these other, if they're mixed in with your personal numbers? We don't know what's what. And so I'm going to give you the opportunity to sort through everything, but I'm going to go right behind you and do it to see what I turn up with. And the burden is going to be on you to prove me wrong, right? So that's one. And then so reflecting on my experience as a CPA servicing clients, if you go to a CPA or a tax professional to do your tax return and they have to sort through your commingled funds, they're going to charge you, your return is going to be at least double.
Yeah.
Because now they're bookkeeping plus doing your taxes. And that's going to take lots and lots of time, and they're going to charge you for it. As far as LLC protection, I mean, it's just, man, that's just a legal matter. I actually take that more seriously than commingling funds, just because let's say you sell somebody something and it damages them in any way. Let's say you sell cosmetics and they use your makeup and it breaks them out or does something even worse to them, to their face or anywhere on their body. They're gonna, without the LLC, they're coming for anything you have in an LLC. They're coming from anything you have personally. And then since you're a minor, they're going to go after they can go after your parents because they're legally, it's not your name on a dotted line, at least in this country, means nothing without your parents because you're a minor. So if your parents own a home, a car, any asset, we're talking about retirement money, they can go after all of that just because there was no legal shield like an LLC in place.
Okay, now you saying parents, I'm actually emancipated, so
Okay. Okay. Oh, well, okay. To my point, that emancipation is legal. That's a legal shield, right? So that's how just important legality is in all of this, right? So my situation doesn't really apply to you, what I just said about the parents, but for regardless of parents' assets or not, whatever you have personally, they can go after without the LLC shield.
okay, thank you.
And one of the reasons why I wanted to bring Kanisha onto this conversation before we bring on a startup attorney is because I know that a lot of the business structure that you choose will, like, that's almost solely how you choose a business structure is the tax liability. Can you kind of explain what I mean here?
Oh yeah. Oh yeah. And this topic alone can go forever, but I'm gonna try to keep it succinct, right? Concise. So um we have terms out there, and I just want to go through the terms very quickly. So you have sole proprietor, right? And that is a person who's just started a business. No LLC, no nothing. They just started a business.
And
Then
so
you have
sorry, I don't mean to cut you off, but to Gigi's point, you were saying that you know a lot of people, especially younger entrepreneurs, that haven't taken that step. Like, as far as getting your PayPal account set up, they report all that stuff as if you're a sole proprietor anyway.
Yep.
So that's kind of like the default thing that ends up happening if you don't take those steps to protect yourself. But there technically isn't any benefit to not just paying I don't even think it's more than $100 in most places to file that paperwork, and it's like 5 minutes online. So I just wanted to jump in and say that the sole proprietorship thing. Please continue, Kanisha.
No, that's very true, very important. So sole proprietor, then you have an LLC, right? So that's most LLCs are owned by one person, and that's simply the same thing as a sole proprietor. They just have the LLC legal shield now, right? More than likely, if you have an LLC, you probably also went and got an EIN. Not always, but you should. If you do the LLC, you can go online and get a free EIN. Takes 5 minutes with the IRS to go along with your LLC, right? Then now let me stop, take a pause there. For the sole proprietor and the LLC, when you file taxes, you're gonna file on a Schedule C, which is included with your Form 1040. And this is I'm talking federal. Every state has their own rules, but states usually piggyback off federal. So I'm gonna speak from the federal perspective. So sole proprietors, LLCs, they file on a Schedule C. The reason, at a certain point, when you're an LLC and a sole proprietor, at a certain point, as your income begins to grow, your net income, remember, because we're always taking profit minus all the money we spend on our business. As you start to grow, this tax structure is my least favorite, because you're paying two levels of tax. You're paying self-employment tax and you're paying federal income tax. As you begin to make more and more money, it's not going to be pretty. The next step after LLC and sole proprietor, if you are an LLC, but now you brought on partners, you can be a partnership. Partnership is in the same boat as sole proprietors and LLCs. They're going to be filed on, partnerships do have a separate tax return. It's the 1065, so the 1065, the partnership. And what you're going to get is you're going to get a schedule from that partnership return that you're going to include on your 1040, but you have the same self-employment tax issue plus federal income tax, right? But then you have corporations, and there are two types. You have an S corporation. The S stands for shareholder. So you have the shareholder corporation, and you can only be one, a business of one, and have an S corp. We love the S corp because the S corp can be used to kind of mitigate the self-employment tax issue. Because what happens with the S corp is you will hire yourself. to the corporation. You will pay yourself a salary. And you will not have self-employment tax on you will only have self-employment tax on the employee portion, not any distributions. And it's getting real technical, but I'm gonna try to keep it very broad. Just remember in your mind that once you begin to make more money as a partner, a sole proprietor, or an LLC, think about the S Corp, because the S Corp can be used to lower the self-employment tax. And then after the S corporation, you have a C corporation. And that's what most of our really big corporations in America are organized as. Right now, the C corporation is winning because they are taxed at the very low rate of 21%. That is the lowest income tax. They paying a lower tax rate than most individuals in this country right now. The thing about the C Corp though, and why we don't recommend that right off the bat, is because if you're taking money out of the C corporation and it flows through your personal tax return, that money gets taxed twice. Once at the C Corp level, second on your personal income tax return. And that may cause an issue. But if you're at a point in your business where I'm not taking money out the business, you're good. You would be an employee of your own C Corp, so you will get a wage, but you're not taking anything else, no dividends, nothing. And you're keeping it in there, the C Corporation is the way to go because it's taxed at 21%, which is very, very low. So if you take anything from this little blurb right now, you're starting off as a LLC because we're gonna all be legal. So we're gonna just throw sole proprietor out because we want legality, we want protection. So we're all LLCs. As you start to earn money, if you hit a point where you are paying more than $6,000 or $7,000 in self-employment tax, that's a lot. On top of income tax, you want to consider S corporation.
Any questions from everyone or anyone about what she just touched on? Anything you want clarification on? You guys all registered your businesses?
When you talk about registering your businesses online, are you talking about LegalZoom, or are you talking about going to see an attorney to have the LLC created?
So I'm going to give you my personal opinion of LegalZoom. So, well, not even LegalZoom, just paying someone to do it anyway. I think it depends on what you're doing in your business, right? So, for example, like for me, I didn't use a lawyer. I found that the paperwork for an LLC and for an EIN and for my business license, they're pretty simple. Like before you go pay LegalZoom $600, before you go pay them that money, go see what the paperwork looks like on your own. Because if it's like 5 minutes and it costs like $100 or $50 to $100, the EIN is free. So all you may end up paying for is your business license for whatever town or city you live in. And then you're going to end up paying for the LLC. And depending on what you're doing in your business, you may have other permits. If you take a look at that paperwork and you can do it yourself, do it yourself. However, if you're selling something that's requiring like research and development, and they got lots of risk to the general public that you're selling to, or maybe if you're a partnership with other people and you need like certain things and operating agreements and all of this, hire a lawyer. Not even LegalZoom, hire a lawyer, an attorney, so that they make sure that everything that you want in your business agreement between other people, or even putting in writing risk that you will not take on if your product or service harms someone else. They can put that like in contracts that you will have people sign, and they can do that all while they're setting up your business as well. I would hire an attorney. So it really depends on what you're doing.
And I would definitely second that and say of the many businesses that I've started, I've only hired an attorney for partnerships. And then as far as like just filing the paperwork for a business that I didn't have a partnership, that was only in like a legal weed company where there are a ton of regulations and you have to get things right. But for the most part, any state, and I filed in Texas and Alaska and California, every single state has made it so, so, so easy. It's worth you at least visiting the process and seeing what they're asking of you before you like double, triple, multiply the cost of registering your business by going to a professional that's probably going to just log on to the website and do it from there too. Like a lot of these attorneys aren't pulling out the paperwork and going all medieval. It's websites set up so that they're extremely easy for anyone to use. Andrea, did that answer your question, or did you want any more clarity?
No, that was great. Thank you. Because I was thinking I was going to LegalZoom or get an attorney, but yeah. Well, most of my friends use LegalZoom. They say, just go on LegalZoom. I don't know. But yeah, you said think about doing it myself, which is a good idea.
Yeah, it's definitely worth at least checking it out first. And it looks like we have another question in from Joseph. So to the legality point, he says, would someone using maritime admiralty law properly use funds from their trust account to invest in their business to lower their tax liability to not owe a bill? I don't know what any of that means, so I don't know if you might for anything like so specific, like you might need to get in touch with Kanisha, and I'm going to make sure that you share your contact information with them. She's super helpful, so helpful, especially when you can just have a one-on-one conversation with her. And let me see if the other one is super general. Yes, that is super specific also. About IDA accounts and it's a long question. So let's continue the conversation on keeping track of these expenses and actually what kind of bill can people expect? Like, is there a certain percentage? I know that you said for C Corps, 21% is what they're getting around now, which is low, which should be alarming to a lot of people, that you need to be putting aside $1 out of every $5 to give to the government. Best, like that's terrifying.
So what I tell my clients and what I tell, what I put out in my content on all my platforms is I say, look at your numbers monthly, right? And this goes back to the point I made earlier. You can't look at your numbers if you're not tracking them, or if they're like commingled in like personal funds. So keep track of money in and money out. And you don't need to do this. It doesn't have to be like some sophisticated program. You can use a basic Excel spreadsheet to track money in and money out. Or if you want to get a little jazzier, you can use some of the low cost, user-friendly accounting softwares like QuickBooks, Zero, Wave. It's a lot of them out there nowadays. But look at your numbers monthly, and you look at what came in and you look at what went out. If you are in a net income position, my suggestion is to set aside 30%. And I know you ain't gonna like that, I know. But remember what I said, as sole proprietors, LLC people, you're gonna pay 2 levels of income tax. You're gonna pay to the federal government. You're gonna pay self-employment tax. You're gonna pay federal income tax. And then we can't forget about our states. The state wants their cut too. So if you look at your numbers monthly and you're in a net income position, set aside 30% of that, so that when your tax bill comes due, you got the money because you set it aside. And I know sometimes it like, people don't like when I say that to them. they don't like it at all. But every dollar you make, that dollar ain't yours. I mean, that's just the reality, I think, of business. That's the cost of business. Just like you gotta pay, for this app, or you gotta pay rent for the business, or you gotta pay for the product or the packaging and the labels. The tax is one of them. You cannot and tax is the one that can come for you. Like they can, and they have no remorse, and they don't have no sympathy. So that's the one I think that should be taken more seriously. I have seen businesses shut down over tax issues. So when you get the dollar ain't yours. Only like 70% of it is yours. And then, you can do whatever you want with the rest. But set aside 30 so that when that tax bill comes, you got the money paid because you've been setting aside the whole tax year. A lot of the like shock when I service clients, right? So let's say I haven't been working with them the whole year, but I just come in and I do their taxes the year after, and they're like, I owe $7,000. I was like, yeah, you owe $7,000. You had a very successful year. Congratulations. You owe $7,000. How much have you been setting aside all year? Nothing. They spent it all. Like it was all theirs. It's not all yours. A cut is for your state and your federal government. So I think if you start now to make that a habit, it won't hurt so much at the end. it won't hurt so much at the end. And then you can be able to pay you're supposed to pay quarterly estimated taxes. I don't know if you're aware of that, but every quarter throughout the year, you're supposed to be sending in a portion of your self-employment income to the government. If you don't and you make a ton of money, they're gonna penalize you at the end. Right now, I have a return. A woman, she was very successful, guys. She made $500,000 this year. She's very successful. Her penalty for not paying quarterly estimated taxes is $5,000. Just for not sending it in every 3 months, she has to pay an extra $5,000. That's a lot of money. That's a lot just for not sending it in. She had it to send in, she just didn't. So
the taxmen don't play.
Don't play. And then, I mean, even if you set up, people say, oh, I could set up a payment plan. Who wants to do that? Because now your tax liability is stacking on top of each other every year, and you're going to pay interest.
So then as far as keeping track of expenses, I know that it seems like a little intimidating and like it can be a lot. Like I know the first time that we had a conversation, it was a relief for you to tell me that just making sure that my stuff is tracked. I told you that I only pay for things that have to do with certain businesses with certain cards. And that is every single dollar going out, and for the most part, every dollar coming in. And you say that is enough.
It is. So like, for example, let's say we are all, we all went and got business bank accounts. And for starters, and I give my disclaimer, this is just for starters. You got your business bank account, and now you got a debit card that's tied to the account, and whatever all your merchant accounts people are paying you are linked to that bank account, and everything that you're paying for, your business expenses, you do it with that card. That you can depend on that bank account to hold a record of your numbers. Now, I said for starters, right? We cannot continue to operate our businesses off of, we call it, bank accounting, because one limitation that system has is, let's say a whole year done passed, you look at your bank account and you see a merchant and you see a dollar amount, you may not even remember, like, what was that even for? Like, where does that even go on the tax return? Because you don't even remember what it was for. So that's why I say go a step further, right? Let's say you have an Excel spreadsheet, and on a monthly basis, you write down everything you spend money on. You have the merchant, you have the date, you have the amount. You can get that right off the bank account, right? But what's added, number one, is you have knowledge. Oh, this was for this. This is for rent. This is for my cell phone. This is for the website developer. This is for advertising. This is for my branding. You can make note of that in your records. And then electronically, you can save that receipt as well. So that's what the bank account doesn't do, unfortunately. It doesn't keep the record of what it was for. And to my knowledge, my bank don't keep receipts for me. So you also keep the receipt as well.
Cool. Does anyone have any questions about any of what we have just discussed? Or I can dive into more of Joseph's questions. He did.
Joseph. I like Joseph. He is on it.
He's on it, taking advantage of this opportunity like I encouraged all of you to do. But he says he initially asked about the space in your house. He said, if I get a garden prepped in the space use, and so he's, I believe, developing like smoothies and like natural foods and stuff. So that is why the garden is related to this whole, it is ordinary, I would assume here. But I want to hear your expert response. But the space usage we want to accurately map. If he gets the garden prepped and the space usage, then have a log log when they garden so they can send it to the IRS. Is that office space extended to cover the garden too? Or is it only for the actual structure if the place where the work is being done is there?
That, Joseph, again, great question. Okay, let me expand on this home office deduction conversation. So in Joseph's case, he probably has an office in his home, right? Let's say he has an office in his home. So he can take that space that he uses. Then let's say he has this other space where he gardens. He can also take that space, right? So let's just assume, let's throw in some more. He uses this really big closet in the basement to hold like packaging. He can use that space. Let's say he uses, like, he done put in some racks in the garage to hold some equipment. He can use that space. You can take any space in your home. It does not have to be all in one enclosure. It can be multiple spaces in your home. If Joseph incurred additional money to develop these individual spaces, he can take 100% of those dollar amounts to develop those spaces. He does not have to apply that percent. Remember I talked about that percentage, right? Like, oh, you use 500 square foot out of a total of 2,000 and apply that towards, for expenses directly incurred to your space. So he put in a cooling system somewhere to keep ingredients cool. 100% of those expenses he can take.
Joseph says, she is giving me the go for warehousing. I'm so down for this.
Yes.
And so I know a lot of you are also in the hair space. That means if you have a dedicated room or area that you use for making your wigs, understand that a portion of the rent you pay, you can deduct and get back in your business expenses.
And you know what? Let me add one thing to this. So a lot of small business owners that are just starting out, they don't do home office because, let's say they ran a loss. I'm envisioning the Schedule C in my mind, and the home office is not like where all the normal expenses is. It's like at a lower line at the bottom. And sometimes small business owners will stop. Once they see a loss, they stop. They say, okay, I'm already at a loss. I don't need any more deductions. Still take home office, because home office rolls over to the next year. So let's say the next year you make money. You can use your home office that you wasn't able to use last year to lower the income for the following year. So still keep stacking these expenses. Some people think like, oh, I didn't make any money, so I'm not going to file any taxes. File the taxes, because it puts on record with the IRS, you got $5,000 of losses you can carry forward to the following year, and it could benefit you in the following year.
And so back to deductions. Laura, your hair looks super cute. I just got my little updo done. I know Gigi just mentioned she took out her hair. When we get our hair done, is that considered another deduction? Are we basically like we get that money back when we file our taxes?
So this goes back to like, remember in the conversation earlier, we talked about ordinary and necessary and business related. And so the argument when it comes to things like that is, what industry are you in? Now, it wouldn't fly for me, right? They're gonna say, I already know, the IRS gonna say, nobody care what their CPA look like, you know? So whatever, I would differ, but whatever. But can you make the argument, right, that you did whatever you did to your hair, your nails, whatever, because you were going somewhere and you was trying to show out and sell some things? And what better than sell it but to wear it? Can you make that argument? Yes, you can make that argument. Yes. Now, I want to put a disclaimer out there that the revenue agent is going to come back and say this. They're going to say, well, when you left the party, you still was cute. So some of that is personal. Now, some of that's some of that you went, you could still go like on a date looking that cute after the event. So while they may not let you have all of it, but can they let you have like 75%? Yes. You know what I'm saying? Because at the end of the day, like if I'm going somewhere, I'm a beauty entrepreneur, I'm going somewhere, I got this like boom boom going on here, I'm cute, whatever. But I'm probably like, man, I can't wait till I get home so I take this unit off. You can make that argument like, no, it wasn't personal. This was too extravagant for me to still go out and personally enjoy it. So in context, it depends, but can you make the argument and you can take that? Absolutely. And I've allowed it as a revenue agent. When I was working with the IRS, I have allowed such things. There's a court case, and I won't get too technical, but there's a court case where a stripper went and got bigger boobs and a bigger bottom, you know, because she wanted to be a more successful stripper. No lie, this is really a tax court case. And she deducted it. And they were saying, like, you can't do that. Like, that's personal. And she was like, look how big these breasts are. Like, I did this for entertainment only. Like, I didn't do this for, you know what I'm saying, for personal. I did this to be an entertainer, to make money. And like, she won because they were huge. They were big. Okay. They were big. So she made the argument that it did make her a successful entertainer and that she didn't solely do that just for personal purposes. It was more about the business than about personal enjoyment. So there is tax law support out there for you to deduct cost of hair, nails, makeup, whatever. What I would do though, to strengthen your case, like ladies and gents, whoever doing whatever, what I would do is I would document that. So you know you spent this much money on nails, makeup, hair, clothing, whatever, right? When you spend that money in your records, write down what you're doing, where you're going. Social media is big, right? So if you went out and you got on Instagram and you took a bunch of pictures, not even like professional pictures, like, right? You were at an event and you were photographed at this event with this stuff on. Keep all that, because it adds to the narrative that you did it to aid yourself in your business when you went to this place. Does that make sense?
Yeah, definitely. So, Tiffany asks, what if you have more than one business and you're using the same space for both businesses? How does that work?
Well, okay, so when it comes to preparing that tax return, at the end of the day, it would kind of wash out. So I would say, like, let's say you spend 50-50 on both businesses. You would just take 50% of the expenses on both of those Schedule Cs. And so it would end up being the total amount anyway. So it really doesn't matter how you do it. It ends up to the same whole because it's going on the same return.
But there's no like double benefit.
No double dipping, right? Because you're gonna spend. You can't be like 100% in both businesses, right? You're getting like 50 and 50, 75, 25, whatever, and then you prorate it on the Schedule Cs.
Okay. Does anyone have any questions? Is there anything that we have not touched on that you guys think is important for you to know? I think knowing that you have a tax bill due at the end of the year, being conscious of that right now out of the gate is really, really, it's something that it's why we have you coming on as one of the first guests inside of our group. Also knowing that a lot of these, because I know when I was first starting my business, is like every dollar that went out, it like physically hurt to me, just because I'm always going to be at least a little bit cheap. So knowing that it's an investment that you're going to get your money back on, I think is also going to be really helpful for this group. Any questions from you guys? And Kanisha, is there anything else that you'd want to say to us, this community of new entrepreneurs?
Yeah, so I would say this. I mean, I'm just going to be the first just to admit, I mean, taxes hurt. As a tax person, I still don't enjoy, like, it's not like I pay my taxes like, whoopee, you know? So what I find with small business owners is that, you know, some of them get like a kick out of when they ran a loss and was able to get a refund. And I say to that, you didn't have to pay taxes, but that also means you didn't make no money. So I think a mindset shift may need to occur, right? Because if you, in general, for a cash basis small business, if you pay no tax, that means you made more money. And what's the more alarming thing is that what's better, that you got out of paying taxes or that you made no money in your business, right? When you make money in your business and you're afraid of a tax bill, there are ways to mitigate that. And it's called tax planning. Tax planning is not something that can be done at tax return time. You got to be thinking about it throughout the year. So like right now, we're in July, we're halfway through the year. This is the prime time to be thinking about tax planning, right? So you can kind of project out, what do I think I'm going to make for the rest of the year? You can comp out what would that tax bill look like? What can I do now to kind of mitigate having to pay some or all of it? The answer is not spend money to run a loss in your business, because then you didn't have a successful year, right? So what I would say is, instead of being like afraid to pay the tax, I would say plan for paying the tax, but also keep in mind tax planning so we can drive that tax bill down. And we actually talked about kind of, you know, 3 big ways you can do that, right? Track all of your expenses. Most small business owners do not take all that they can because they're not tracking anything. Track everything from the $1 pack of gum all the way up to if you went to a conference and had to buy a flight, pay for lodging, and conference fees. Take it all. When in doubt, take it. Okay? So track everything. 2, pay attention to the money you're making, because you may need to evaluate your entity structure. Different entity structures will result in different tax bills, basically, right?
Mm-hmm.
And then 3, go and get that business bank account. You got to get the LLC to do that, fine. But that will legitimize you in the eyes of the IRS. If they see you commingling, they're going to go deep, because they're not going to trust any of your records. They're going to go real deep.
And does deep include your personal accounting and like?
Yeah.
So it's
They'll
open
say,
you totally.
I remember one case where a guy did not report all of his income, and I knew it because of the lifestyle he lived. It just don't make sense, you know? So because he commingled, it gave me the power to be able to literally go through all of I had to summons his bank accounts because he wouldn't give them to me. Summons his bank accounts and comb through everything to come up with a tax return that then matched his lifestyle. Oof. You don't want the IRS to do that. You don't want to do that. They ain't got nothing but time. so so keep those funds. I don't care how small you are. If you're not in an income producing situation yet, we got to run our businesses like they are real Fortune 500 corporate businesses, because they will be someday if you want them to be. We got to start running them like that from day one, so that when it happens, the habit is already ingrained in us when it comes to these finances. Not just from a tax perspective, but just to know the health of your business. You can't know if you don't have right numbers. When we went through this pandemic and everybody was applying to these loans, they had to have good numbers. That was a big requirement for the SBA, is that they had financials and that they had tax returns. People were scrambling, you know? So that's I'm going to get off my soapbox. I'm not going to preach anymore. I hope this was helpful to you all.
It was, but I have a couple more questions before I have you drop your contact information. Dominique asks, how do we pay ourselves if we're not going to be commingling? I think this is a huge thing, and I'm so glad you asked this, Dominique. How do people pay themselves without this whole commingle thing? Because people think if it's in the account, I can just draw.
So what I would do is, when it comes to and how you pay yourself, it differs by entity structure. That's why it's very important to think about that, how you want to be structured. So for sole proprietors and LLCs, you guys are not employees of your business. It's actually like you actually just can't employ yourself in your business. And so when it comes to draws, right, the way you do it isn't so much the big deal, right? So if you go to your business bank account and you withdraw some money, that's not really a big deal. What I won't say to do is use the business card to pay for business expenses. That's not the same thing as taking a lump sum from the business account and you record that in your records as a owner's draw or owner's distribution, right? So that's what I would say. The amount, that's up to you, right? Pay yourself whatever you would like to pay yourself. You're going to get taxed on it anyway. So, but what I would say when it comes to the recording of the draw, go to your business bank account, take that money out, do like a transfer into your own account, or take the money out as a whole and transfer it to your own account, and then start using your personal card to pay the expenses. But don't use the business card to start swiping and paying personal expenses. Take that out as a whole, record the amount in your records as an owner's draw or owner's distribution. Now, when it comes to S Corp and C Corp, you're employees, and that's how you pay yourself, through a W-2 as a wage.
Okay, any other questions before I have Kanisha drop her contact information for you guys? And definitely take her up on her offer to answer your questions, to connect with each of you. Like, she is phenomenal. Like, I don't even know how she would like pull up the answers to these questions. Like, these are all off the cuff, and she went hella deep. Like, take her up on it. Thank you so much for your time, Kanisha. How can we get in touch with you?
Oh, for sure. So my website is Coleman Tax. I'm going to put it in the chat here, but it's ColemanTaxLLC.com. And then my email address is info@ColemanTaxLLC.com. Did it go to just you, or?
It looks like, let me see what is going on with the chat box. Is it set to, oh,
You
that's
would have
everyone
to
publicly.
select.
Okay, that makes sense. I think you can add your comments there for everyone, but let me.
Oh, there we go. Yeah, I see it now. Okay. So yeah, I just put my website there and my email address there. And then
Cool.
I do publish a lot of content on Instagram, so I'll just throw this in there too. One thing that you said earlier, Charlotte, that I thought was an excellent point, like a super excellent point that actually a lot of people don't realize, is that when it comes to tax, I know that a lot of CPAs will specialize, right? Like I just love the beauty industry. You got real estate specific folks. But when I tell you that most tax things apply to everybody, like you said before, it's just that we have chosen an affinity to an industry. But most tax things do apply to everyone. There are very few specifics, and they're like the big industries, like the ones that are heavily regulated, like insurance and banking and real estate and investment, stuff like that. But when it comes to like the broader industries, there are very few things that only apply to, like, say, beauty entrepreneurs. So keep that in mind as well. If you see some very valuable things, like, you don't have to, if you go to my Instagram and my website and you see that I serve beauty entrepreneurs, a lot of that stuff, like we talked about today, is very generic and anyone can use it.
Cool.
So there's my IG handle there. I do publish and go live a lot there if you want to see or hear me more. And I wish all of you the very, very best.
Absolutely. Thank you so much for your time, Kanisha.
Thank you.
And then if you guys want to hang around, I'm going to do some Q&A like I promised over the weekend. You are more than welcome to do that. But I am going to be touching base with you, Kanisha, yeah, got some business to talk about. So
Wonderful. I'm ready.